Hi, and welcome back. Today, we are going to be talking about a sector that is very, very important for everybody. Now, a lot of times when clients come to us and the main focus of their conversation is growth, we like to lead them in the direction of educating them about equities, specifically the biggest equity that there is, which is stocks. Now, in order for clients to understand stocks, we like to break down these stock sectors. But first, you may be asking yourself, well, what is a stock? And simply put, a stock is that you're owning a piece of the company, equity in that company, in hopes that that company grows. And if that company grows, obviously your small portion grows as well, right? So that's why people like it, and that's why people invest in companies that they believe in, just like I brought some examples from my house today. Now, in order to understand stocks, because again, there are so many stocks out there that are on the stock exchange, it kind of can be overwhelming. So let me break it down to what the stock sectors are, and then maybe some examples from those sectors so you can familiarize yourself with them. Now, the GICS has 11 different sectors that they break down that categorize all these stocks. Now, within these sectors, there's also different industries. But today, what I wanted to focus on is these different stock sectors. Now, what's really important about these different stock sectors is also how they move with the market. And what I mean by that is when the market is down, some of these sectors do better. And when the market's climbing, some of these different sectors do better. And when the market is at the top of its business cycle, it does better. Let me kind of give you an example of that. So first, let's start with industrials. Now, industrials has anything to do with manufacturing and transportation and some goods and services. A really good example of this would be what this whiteboard is right here, which is Post-its, which is MMM company. I got Post-its right here. That's a good example. Or Alaskan Airlines would be a good example. So that's kind of what industrials are. Obviously, industrials do well when people have, like we do right now, people have a pent-up demand for travel and things like that. The next one is materials. Now, materials has to do, again, with any kind of cost, whether it be lumber, paint, things like that. What I brought as a good example of materials is paper and paper mills, right? So that's a really good example of something in the materials sector. So industrials and materials are two of those sectors that are at the top of the business cycle. The next one is financials. Now, financials is obviously a very big sector, but what are in the financial sectors? This would be things like companies that are insurance companies like AIG, or even things like Bank of America. So Bank of America is a good one, and we see it at very low right now. The next one is real estate. Believe it or not, this is actually the smallest sector of the 11. Why? Because this isn't actually just all the real estate in the United States. This is specifically for real estate investment trust. Now, a REIT, as it's abbreviated, basically what that is basically a mutual fund or an ETF of real estate, to where it's a whole bunch of buildings or different commercial properties, and then the owner of those REITs are paid what income is generated from those properties. The next one is going to be consumer staples. Now, consumer staples are things that we use on a daily basis and that we can't live without. Some really good examples of some consumer staples are things like Coca-Cola, Procter & Gamble, who makes toothpaste. So we like those companies. We see that these value stocks become really important as the market goes down. The next one is utilities. Utilities obviously is a very important sector, right? We always got to keep the lights on. So this sector will always be prevalent and always be around and always be good. A great example of utilities would be like Edison, right? I would have brought my bill here, but we don't want to see that. Now, the next one would be energy. Energy, again, is going to be like solar or oil and gas. So a great example of that would be like Shell or Chevron, right? We won't talk about gas prices right now. And then the next sector that we want to talk about is consumer discretionary. Now, consumer discretionary is the exact opposite of consumer staples, right? Consumer staples is what you need on a daily basis, whereas consumer discretionary is not what you need on a daily basis. It's just what things that you want that make your life better, right? Good example of this. I know we've all had packages coming to our house with this on it. This is a great example. Amazon. We don't need all those products that we get delivered to our house. Or even Nike, right? I like these Nike shoes, but again, I didn't need these Nike shoes. And just like you should with your stocks, we always want to buy these at a discount. The next section we want to talk about is information technology. Now, this is obviously a growing and booming sector because, again, the companies that are held within it, right? We're talking about Apple. We're talking about Microsoft. I'm sure you've probably heard of those companies before. So really, really big sector. The next one would be communication services. AT&T, Verizon, Roku is one that did really, really well in 2020. So those are a couple examples that are in that sector. So as you can see, there's all these 11 sectors, and it's really important. And what we talk to our clients all about is market rotation. What I mean by market rotation is where we're at different points in the business cycle is going to be when more of these companies do better. And so that's what we're always trying to tweak and rebalance with our clients within their portfolios. So again, this is just kind of a simple breakdown of stock sectors. But another thing is a lot of these stocks do something to entice you to be in those, right? A lot of them pay you dividends. So across the board, a lot of these stocks pay dividends. And again, like I said, that just like McDonald's pays a dividend, it's in order to entice the owner to kind of buy more and to stay and hold those stocks. So thank you so much. Again, any questions that you have, please let us know and we'll help you with that, or set up a complimentary consultation and we'll take care of this for you. Thank you so much. Thank you so much for joining us. If you like some of this educational content, please look out for some of the new upcoming educational content that we'll be providing you. Or what we always recommend is give us a call for that complimentary consultation. Like Rich always says,
nothing ventured, nothing gained.
So please give us a call, 1-800-570-5711. We look forward to talking with you soon.
Thank you.